This is Dan Max, the trading agent. This is a stock trading and recap channel that I wanted to share to the masses. In a probability game, there's no certainty. Here are my insights and predictions.
Hello, fam. This is the Trading Agent. Wednesday, November 3rd, pre FOMC meeting. I want to put my thoughts out on how to trade this kind of market, how to deal with the FOMC that comes out at 2 o'clock, and then their conferences. Just what's the best way to do things, or what have I found that's been the best solution for all this? So let's just start off by the VIX. If the feds do say something, it's very obvious what's going to happen here. The VIX is going to take off. It's making higher lows. So, and it's having an inside candle currently. There's really nothing this morning that means anything. But if they say something and their language scares and spooks the market, don't be surprised if the VIX spikes. And if they don't really do anything that is a concern, it could come right back. So I like to think about it from, kind of look at where the VIX is going into the FOMC, because if it's high, there might be a blow off. And if it's at lows, it could be a bottom. Not always. It really just depends on what they say. Well, here are the keys to really what I think is the biggest part of the FOMC day. And this is the hardest thing. And again, as I tell people, the hardest things are usually the right things to do in the market. I don't really trade before the FOMC unless I see something really, really, really juicy. For example, the GDX said if it got down to this 31 level, it looks like an head and shoulders bottom here. That's maybe something I'm watching. But here's the thing I know 1000%. The Fed meeting reaction can create multiple traps on both sides, bull and bear traps. You will see action. For example, this could go down all the way to 30 and then pop right back up. I've seen multiple traps on different stocks, indices, everything during the FOMC, because their news reaction is what gets people to be emotional. You see the spreads and options widen. You see the pricing mechanisms become very expensive in the market. And that's why I just tell people, unless you're at extremes, don't play and wait till after the news. Because after the news, then you'll take the risk out of it. If you want, it's almost like waiting for the roulette wheel to come and you try to predict red or black, or then afterwards it hits black and then you put your money on it and then you can play. All right, it's black. That's how you play it. You know now what the actual news is. You know what might be coming. And even then you can see choppiness. You'll see a big drop in the market and then it'll pop back, or a big pop in the market and then it'll drop. You look for the extremes. You look for what doesn't make sense in the short term, and that's usually the best way to trade it. And people will go, well, you're not really giving me how to trade. And I'm trying to show you how to not lose money. That's one of the things about trading. Everybody can make money at times. You're flipping coins sometimes, you're gambling, you're playing trades, they're working. How do you prevent yourself from losing money? Doing things that are going to put the odds against you. Again, this is a probability game. I don't want people to think that you have to trade all the time. This is a casino. You're waiting for the best probabilities. You're waiting for that blackjack count to get the best in your favor so that you can bet more. You're thinking about how the points laid out in craps. Is it time? Is it due for a 7? I mean, you just have to think like that in the probabilities. And so if you're watching this market and you're saying, I have to trade before the FOMC and try to guess what they're going to do, well, you're gambling. It's a 50-50. You're flipping coins. But if you wait for the news, you wait for the press conference, and you wait for extremes, maybe, for example, like I'm looking at gold today. It's down $2 and or $20 an ounce, back into our zone. Said, hey, it's holding high and tight. Don't be surprised if it comes back down, if it does, or it goes higher. Well, is this really makes sense to be down? This is something I would be watching for a trade, because this could be a bear trap. I mean, everybody who's selling today might regret it. The volumes are light. I mean, look at this. This is not telling you anything. There's examples like that. I mean, you'll watch something like Tesla. Here's another one. It's going to be hot. It's nothing today. The news, the FOMC, nothing is going to happen until they release their news. End of story. What they're going to do, what the projection is going to be, and then usually the first direction is the wrong direction. Keep that in mind. The first direction is usually wrong. If the market drops, it'll probably rally back. If the market pops, it'll probably drop. You'll see that in a lot of your favorite stocks and a lot of the favorite things that you follow. So from the bottom of my heart, I'm trying to keep people from losing money. Think of it that way. This is how I trade the FOMC. I literally do nothing. I have particular stocks and things that I'm looking at price levels, but I'm not chasing. I'm letting extremes come to me. You ever heard the saying, let the trade come to you versus you chase it? It works out much better. All right, Dan Max, the trading agent, checking out. If you got any questions or comments, please post them. I'll try to answer them. I appreciate you guys. Thanks.
Thanks for watching. Please subscribe if you like the content. Also smash the like button, share with your friends, and add a comment. If there's a topic or stock you'd like me to give you insight about, let me know in the comment section. I'll do my best to answer your question. Thanks.